They got an IPO. They're a third place marketplace. That's not a good place to be in. They can't raise any more money from their investors. Why? Because the investors just put their money into their competitor. Farfetch winning, GOAT winning is a hell of a lot better future for luxury manufacturers than it is for Amazon and Amazon Luxury to win. What is Groupe Artémis? Groupe Artémis is our example of a traditional enterprise on today's show. Groupe Artémis owns a bunch of different luxury fashion brands. Groupe Artémis has been the controlling shareholder of Kering, and then Kering owns a bunch of these different brands. Artémis also owns Christie's, and so Artémis owns Christie's separate from Kering, but Kering owns Balenciaga and a bunch of other brands here. Yeah, Balenciaga, Alexander McQueen, and others. Balenciaga, why that's really relevant to the conversation. Let me show you these shoes. That's the beauty of having a video show. These shoes, here we go. Let's just zoom in on these. Bam. Okay. Here are your Balenciaga shoes. These things on the left, the black ones, they look like a very soft material. $800. The ones third from the left, these guys right here, that's $1,000. Yep, these ones, $1,000. So yeah, they're cashing in on the sneaker craze. And so Kering owns Balenciaga and others, and that is then owned by Groupe Artémis, and Groupe Artémis also owns Christie's and others. Okay, so what did Groupe Artémis do? Well, two things they've done, actually, both in the sneaker marketplace arena. Let's start with GOAT. GOAT, if you don't know GOAT, they are one of the top two sneaker marketplaces. There's StockX and GOAT. StockX might be a little bit ahead of GOAT, but GOAT got $100 million from Foot Locker a few years ago. And, they've all started with sneakers. GOAT in recent, over the past maybe year or two have really started to say, hey, we want to go beyond just sneakers. We want to go into a bunch of adjacent verticals, so it's sneaker resales. They say, well, what is sneaker resales? Sneaker resales means a lot of these sneakers are so rare, they might retail for $500, but you can't get them. So then you got to go on these secondary markets like GOAT and StockX, and you got to pay $1,000 to get the sneakers. Now, that's not every line of sneaker. That's just the kind of exclusive lines of sneakers, right? The Nikes and Yeezys were very hot, and then those have kind of fallen off, I guess. And, now the Balenciaga shoes, and now Dior is doing shoes with, I don't know, Nike, and I don't know. I can't keep track of it all, but my friends, they love this stuff. I mean, I like it as an outsider, but I can only track it so much. But anyway, you can spend a lot of money real quick on these sites, and that customer base, this ultra high end kind of consumer, these marketplaces have done phenomenally well in COVID because generally these are very affluent consumers. They have a lot of disposable income. They have been generally less negatively affected by COVID and have just been locked in their, locked down and have been buying a bunch of stuff. So we've actually seen these kind of alternative luxury high-end marketplaces like GOAT and StockX really do well in COVID. They raised $100 million last September at a $1.75 billion valuation. And now what Artémis is doing is they're following on. They have not disclosed how much they followed on for, but before this investment, right, which we don't know how much they invested, GOAT had raised about $290 million. So now Artémis is following on to this valuation, to the Series E funding. I would imagine Artémis got the same terms and they're just doing a follow-on here. I would imagine the valuation hasn't gone up, but Artémis is saying, hey, if we're coming in, we'll follow on. Maybe we'll put in $50 or $100 million, something like that. Not confirmed, but I'm just That would kind of be directionally where I'd say it's got to be at least $50 million. Why is this significant? Well, one, you are seeing now two traditional enterprises get involved in GOAT. One being Foot Locker, and the other now being Groupe Artémis in very big ways, right? Foot Locker, $100 million. They did that back in February of 2019 at a $500 million valuation. I was prompting the CEO to put money in. So they've effectively tripled that at least. We also have news that First Dibs, which is kind of, I guess, the number 3. You know, they do sneakers and they do art and they do other products also, but it's somewhat similar in this space. They're looking to do an IPO at around $1 billion valuation. So you can see there, go 1.75, and it's not even, you know, obviously all these IPO valuations are just very, very high. So First Dibs is definitely, you know, smaller than GOAT and StockX. You can see that here. But who else invested in First Dibs? Groupe Artémis did. Groupe Artémis, which controls Gucci, owner of Kering. So backed by Insight, right? The New York-based company raised $76 million in 2019. From who? T. Rowe Price and Groupe Artémis. Literally, like the same month that GOAT pulled down $100 million from Foot Locker, First Dibs got $80 million from, it was like Allen and Company, Benchmark, big time platform investor, and Groupe Artémis, and actually the founder and CEO of Groupe Artémis, Pinot is the guy's name. So, I mean, to me, this news, well, not this news, but you know, the IPO news makes sense when you say, oh, I mean, these guys need cash. They got an IPO. They're a third place marketplace. That's not a good place to be in. You don't want to be third. Third is basically last. Not as bad as last, but it's pretty bad. Winner take all markets. These guys, First Dibs, trying to go public ASAP. They can't raise any more money from their investors. Why? Because the investors just put their money into their competitor. Yeah, not so good. That said, you know, the writing should have been on the wall here because GOAT had been partnering with Kering brands like Balenciaga for a while now, right? Which is also odd. Why would you ever let that happen? Or why or how would that, you know, so, you know, this is not coming as a surprise to the First Dibs guys or the GOAT guys. I mean, you could definitely smell this in the water that Artemis is, you know, they're playing both sides, or they're playing multiple sides, or they're not sure. Maybe they weren't happy with First Dibs, but it's not like this stuff just happened in the past few months. This has been a long time coming, because here's an article from January 2020. And this is when GOAT signed Kuz from the Lakers to be a brand ambassador. And an example here, you say, oh, well, what does Kering get out of being a strategic investor in, in and now 2 of these marketplaces? So Kuz, he has an endorsement deal with Puma, but this deal with GOAT will allow him to wear other luxury labels from the Kering group, such as Balenciaga and Gucci. And this was before a Groupe Artémis had even put money into GOAT. They had a strategic partnership between those 2 companies. So, it's, if you think about it and you take a step back and you say, why would these luxury brands actually want to invest and take a stake in these businesses as opposed to just being a partner? It just is going to give you more control, more say, more preferential treatment, which can happen in a variety of ways, particularly in these luxury markets, when you have, maybe you don't have a board seat, but maybe you are a board observer. You're basically just at the tip of the spear. Think about it as being at the tip of the spear to figure out how to best utilize a new distribution channel. And that distribution channel is digital, right? And so if you're saying, hey, stores, COVID, right, are one distribution channel, but then there's this new thing called apps and websites. Not that new anymore. It's 2021, gang. And marketplaces are the dominant model in e-commerce. I think that's also pretty clear. We've seen Richemont do an about face from Yoox Net-a-Porter and now going heavy into Farfetch. They've also gone into a watch marketplace called Watchfinder. So it's now you're seeing Artemis do this. You're seeing Richemont do this. It is time that the luxury manufacturers are saying, wow, we don't want Amazon to win, Amazon luxury. We don't want the tech monopoly to win. We want to support the up and coming marketplaces. Even if it's a pseudo platform conglomerate like Farfetch winning, GOAT winning, is a hell of a lot better future for luxury manufacturers than it is for Amazon and Amazon luxury to win. And that's why you see now Groupe Artémis saying, yeah, first dibs. Well, you're number 3. Yeah, I can't just tie my future to you, first dibs. I got to go in on GOAT. I got to secure my future in the digital economy, which, oh, by the way, is just controlled by marketplaces. So I love this deal. Took Groupe Artémis a little bit of money to figure out who the right bet is. Fortunately, Dick, the CEO over at Foot Locker, put money in early into GOAT. But you want to go number 1 or number 2. That's what you want to do. Number 1 or number 2. Don't invest in the number 3. Not a good idea. Hi, I'm Alex. Thanks for watching the show. Make sure to hit that subscribe button, but even better, make sure to follow us on Odyssey, follow us on Rumble, and text us 203-646-5159. Text the word Monopoly. You'll be subscribed. You'll get updates about when we're going live, our latest videos, and we'll send you even a little goodie bag. And in the event that we all get banned from big tech, we'll still be connected.